Today, Fed Chair Jay Powell says now's the time for crypto regulation. Luna overtakes Ether as the second most staked token. And how much crypto belongs in a portfolio? I talked to a member of CNBC's Financial Advisor Council to find out. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Crypto prices were mixed today after the recent rally, with some coins turning positive by late morning. The market as a whole rose about 1.5% as of noon Eastern. And Bitcoin managed to gain 2.25% after starting the day in the red. It sat just above $44,000. Ether crossed back into the green as well, gaining 2%. But a different story for XRP. It dropped by 1/3% since yesterday. For more on these price moves and what analysts are watching, here's fellow host Tanea McKeel.
We're hearing a lot this week about increased adoption of Bitcoin in Ukraine and Russia and using crypto to get around sanctions, which many have come out now and sort of rejected that idea. One thing I thought was interesting is data from Kaiko this week shows ruble-denominated Tether volume is more than twice as high as Bitcoin volume. So that suggests that stablecoins could actually play a more important role as a safe haven asset or in circumventing sanctions. Crypto briefly sold off with the broader markets late last week, which I think is a good thing to remember before we began to see the rally that we've seen this week. So some analysts have been saying, that the whales at that time, or the high net worth investors, sort of saw that as a time to buy the dip in crypto. And as we've been talking about since the beginning of the year, really, we're seeing now how split investors really are on how to value Bitcoin. We've been a little bit obsessed with its correlation to the S&P 500. And many thought when the war between Russia and Ukraine began last week, this was going to be Bitcoin's time to shine and show that it can be a safe haven as well as a form of money, not to buy coffee, but now we've seen it, be used for humanitarian aid. My big takeaway is that, like many of my sources have said, Bitcoin can be both. The price can be driven up by both those in Eastern Europe who are new adopters of cryptocurrency. It can also be a risk asset and a store of value and digital cash. Turning back to the charts for Bitcoin, I'm hearing that Bitcoin is poised to retest its 90-day high price, so above $59,000, and that'll be in the coming weeks. Ether also is on track to retest the $3,500 resistance level before the end of the month.
All right, those are the price moves. Now let's talk about some of the headlines. First up, Terra's Luna just passed Ether as the second most staked token, following a 70% rally in the past week, according to Staking Rewards. Now, staking is when cryptocurrency holders offer up some of their coins on a network for the chance to validate transactions and earn a reward, an alternative to mining crypto through proof-of-work protocols. Luna now has a market cap of roughly $34 billion, and $30 billion of that is staked on the blockchain network. As of noon Eastern today, Luna stakers were making an annual return of 7.5%. What's the most staked token? Well, that's Solana, with about $38 billion staked. Next, Fed Chair Jay Powell testified in front of the House Financial Services Committee today, where he said the war in Ukraine shows the need for crypto regulation.
It underscores the need really for congressional action on digital finance, including cryptocurrencies. We have this burgeoning industry which has many parts to it, and there isn't in place the kind of regulatory framework that needs to be there. It was probably no different with railroads or telephones or the internet, and ultimately what's needed is a framework, and in particular ways to prevent these unbacked cryptocurrencies from serving as a vehicle for terrorist finance and just general criminal behavior.
Powell is pushing for these regulations right as 4 senators asked the Treasury Department to keep Russians from using cryptocurrencies to skirt U.S. sanctions. Some of those members, like Elizabeth Warren, sit on the Senate Banking Committee, where Powell will testify tomorrow. Lastly, the European Union is also working on its own crypto regulations, and they might be getting more lax. Lawmakers dropped language that would effectively prohibit Bitcoin and other proof-of-work cryptocurrencies. The leaked draft of the bill would have banned services from dealing in coins mined using proof of work. That bill caused so much uproar that a vote that was scheduled for Monday had to be canceled. All right, with all the volatility around crypto and risks of regulation around the world, how much belongs in your portfolio? I recently spoke to Ivory Johnson. He's the founder of Delancey Wealth Management and a member of the CNBC Financial Advisor Council about how investors should manage their portfolio right now. I'm joined now by Ivory Johnson, certified financial planner and founder of Delancey Wealth Management. Ivory, thanks so much for being here. Starting off at a high level, if someone doesn't have any exposure to crypto, is now the time to buy?
I don't think any of us can time any asset class, particularly Bitcoin, because it is so volatile. But if you use the same tools and asset allocation, it's something I think should be part of your portfolio.
So we've talked about Bitcoin, which is the highest profile and the largest of the cryptocurrencies. But what's your take on some of the newer upstart ones? Dogecoin, of course, became very popular this year. Elon Musk was a fan. It had skyrocket in gains. Okay. But are those coins that investors should be targeting, or should they stick to the larger and more well-known ones?
I personally would advise against buying some of those altcoins that don't necessarily have a business model. Especially when there are so many other things in crypto above and beyond, just say, Bitcoin. For example, there's Ethereum. That's its own blockchain. And that's where a lot of these other applications are trading on. Think about the metaverse, which is worth $500 billion. It's that virtual reality. It's expected to be $800 billion within 2 or 3 years. Non-fungible tokens. So you take an asset like a piece of art or real estate, that's worth 40 billion. They're expecting that universe to be worth 80 billion. And so think about the applications. Think about if you're writing a book, you can sell portions of your script, right? Maybe sell the characters as an NFT. Now all of a sudden, not only are you raising money, but now you have an ecosystem that you can go to the publisher and they're already going to buy your book the first day. If you have 5,000, 10,000 tokens sold, on day one, you could become a New York Times bestseller. So a lot of different applications. A lot of these NFTs are traded on the Ethereum blockchain. That's another coin that you can buy. That's similar to Bitcoin in the sense that it's one of the older native coins. They have their own blockchain. So a lot of different ways to diversify into crypto besides just Bitcoin.
How does Bitcoin and crypto fit into asset allocation in a broader portfolio? What percentage should you be allocating towards crypto? And if your risk tolerance varies, how should you be thinking about constructing a portfolio with crypto?
So as an avid golfer, I try to make sure my swing is the same all the time. You want to have a repeatable process. And in my space, what that means is you have the asset allocation that represents the client's appetite for risk and their time horizon. So you wouldn't change your process with crypto any more than you would for technology stocks. And if you backtest it, the Digital Asset Council for Financial Professionals backtested Bitcoin from 2014 to 2020. And one of the things they found is that adding Bitcoin actually increases the Sharpe ratio by 10%, no meaningful increase in the standard deviation, and the max drawdowns don't really change. So adding Bitcoin in a responsible manner actually shows that it can improve the performance of the account, particularly if you were to do quarterly rebalancing. If you do quarterly rebalancing with an allocation of less than 6%, what they're finding is your standard deviation stays in a 6% in a single digit range. You have a max drawdown of no more than 12%, but at the same time, your returns can go from 25% to 55% based on the allocation that you have. So there's some back testing that's been done that shows if you're responsible about the way you add crypto into the portfolio, it can benefit your clients.
Of course, it depends on the client. And as you mentioned, the time horizon and the goals. But is there any, threshold that's too much? Is there a percentage that you would look to your clients and say, maybe that's a little bit much for an asset like crypto?
Well, certainly. If somebody is 65 years old and you've got, 10, 15% of their money in crypto, that's obviously too much. But if it's my son who's 24 years old, if he had 10 or 15%, because he doesn't care if it draws down 72%. He doesn't care if you see a 50% drawdown in a matter of months, because he may not touch that money, presumably, until he's 59 and a half when he's getting ready to retire. So, there are some levels where it becomes excessive, but I'll tell you, even a 1 or 2% allocation to Bitcoin over an extended period of time has shown pretty good results.
Before we go, Fed Chair Powell also gave an update on the Fed's research into a central bank digital currency. Here's what he said.
This will be something that we invest a fair amount of time and expertise and hiring people and things like that to try to get it right, but also to understand whether the benefits actually outweigh the costs, which I think is an unanswered question both here and around the world. Nonetheless, it's our obligation to move vigorously to understand the answers to that question so that we can deploy a central bank digital currency if it's appropriate.
With that, you're all caught up for today. We'll be back again tomorrow, and we'll see you then.